Hey, this is Justin with DayTradeTheMarkets.com. It's Tuesday, April 11th, 2017, and I thought with the buying gap we had in gold and then the trend day higher we had in gold, I thought it'd be a good opportunity for a little supplementary video, a little blog post video. And I thought I would talk about two topics that we saw in gold today. One is, how to handle, buying or selling gaps and talk about what I call the gap trade. And then number two, talk about the idea of what I call stacking boxes and what that means from a trading perspective. So let's start with the idea of the gap trade and what that means. So let's first talk about what is the logic of a gap. Well, a gap means that something changed overnight, and in this case, it's a buying gap. So we open above the prior day's close, and so we have a buying gap. Something happened in the overnight, and from a logic standpoint, we want to know. Is this gap likely the beginning of a move, which it turned out to be in gold today? Is it going to run away, keep going in the direction of the gap, or is the gap opening simply kind of a bargain hunting opportunity? Is it just a good deal? Is it a good place to be a seller where you're getting kind of a bargain on, with the higher opening? That's the first question we want to ask. And so the first, decision point that I look at, or first, data point that I look at is, well, is this gap in the direction of the big picture bias? Okay, and in this case, we lay out the big picture bias every day before the day starts, and our big picture bias was leaning up in gold heading into the day. So yeah, it's in the direction of the big picture bias. So that tells us that we're more likely to have a runaway than for it to be a good deal, as opposed to if our big picture bias was down and we gapped up, then it's a little bit more likely that it's a good opportunity to be a seller. That's not the case today. Today, our big picture bias was heading up and we had a gap up. That means we're more likely than not to have a runaway. Again, that's not, a sure thing by any means. And so that kind of leads to the second question, which is, actually, let me write this out. So the first part is the gap in the direction of the bigger picture bias? In this case, again, it is, because we have a buying gap and our bias is leaning up. And the next question is the first major aggression bar also in the direction of the big picture bias? And in this case, that's also the case. We have a level 3, or what we call extreme buying aggression bar. It turned out to be the first bar of the day. So that's kind of a 2 for 2 on that one, the first major aggression bar. So when you have that, this on its own is telling us that the gap is more likely to move higher. This kind of confirms it. Again, it's not 100%, but it's a pretty good trade when you consider that if you're wrong, your stop's going to be down here. Not that big of a risk ultimately. If you're right, it's the potential. Doesn't mean it always happens, but there's a potential for a very nice move higher. And that's exactly what we had today. So again, if the gap is in the direction of the big picture bias and the first major aggression bar that you see is also in that direction, it's a pretty good opportunity to get on board a runaway trade. Same thing if the gap would have been down, but our big picture bias was up and our first bar was a level 3 buying bar. It'd be a good buying opportunity that way as well. So for it to fill. So I hope that makes sense. Just wanted to kind of talk about that because it's starting with an idea or a logic piece, knowing the question to ask, and then knowing how you can go about making the decision so that you get your risk in line with what the potential opportunity could be. And so I like that idea from the gap trade perspective. So that's the first part. Now the second part, let me get rid of these lines here. The second part is the idea of what we call stacking boxes. And so one of the things that I teach in on our site and in our membership is to frame the market in terms of boxes. And number one, that's giving us kind of a smaller playing field. So when this box comes in, we want to decide what's the best decision we can make with that box. And what's the best decision in this box? What's the best decision in this box? What's the best decision in this box? And so forth. So instead of looking at the day as a whole and having it be a little bit overwhelming, we're trying to kind of shrink the playing field, if you will. So we're only trying to focus on one box at a time and what's the best decision we can make with that. At the same time, you can also look at how the boxes are behaving relative to each other. So the first box we had was this buying box. And so our question would be, is the low of that buying box going to be able to hold, or are we going to be able to break above there and accept above this box and perhaps, if the buyers are really strong, form another buying box? So when that happens, that's kind of our second buying box there. So this is buying box 1, this is buying box 2. We've started what I call stacking buying boxes, okay? And until something changes to get us off of that, what that means is that we're likely in a trend type of a day, or with the potential for a trend type of a day. It means a few things from a trading perspective. It means, number one, you don't want to try to be a hero and fight that. You don't want to try to pick off, fade the highs. So if you like to fade the highs, this is a day you need to stand aside. Okay, you need to be going with the direction of the stacking boxes. So this is telling us buyers are in total control until something changes, and we need to be getting on the long side. We need to probably be doing so in a more aggressive manner as opposed to a more conservative manner. And then once we're in the trade and it's moving in our direction, we are more than likely going to want to try to hold for a larger profit as opposed to taking a quick profit. So just by looking at whether or not the boxes are stacking or not gives you a pretty good handle on that. So today we had a situation where two things happened in tandem, where we had a gap that was a runaway gap and we started stacking buying boxes. And so, this was our first potential red flag where we had a little bit of an inside selling box. So that's a clue that, okay, maybe the buying stack is coming to an end. We'll see. Can the selling have some follow through, or is it going to get rejected? Well, it got rejected, so again, we're back off to the races to the upside. Same thing up here. It's not terribly surprising we ran out of steam up here around in the 73, 74 area. That's where we are expecting some potential resistance. So we got another big buying box. This is such a huge bar. It's potentially capitulation. And what we saw here was a little bit of a back and forth where we had I call this a mini battle with some decent selling that came in with no follow through, and it was taken out by some really good buying. If the buyers were going to continue this thing higher, they really should have been able to do it from here. In other words, the selling that came in right here was defeated pretty soundly by this buying, but the buying just didn't have anything left. It couldn't attract any more buying. And so, again, that doesn't mean sellers are going to come in and take this thing to new lows by any means. That's not what it means. It just means that this is a little bit of a red flag when, it looks like the buyers are going to win this little bit of a mini battle and they can't do it. It's telling us that, again, not that you want to just get short. It's telling us maybe this trend is a little bit out of steam and we're going to go sideways, which is what basically happened. However, until the low of this buying box would be taken out, we would definitely be leaning to, not even leaning, but definitely be, committed to the upside, just knowing that we need to be a little bit more careful because there's potentially sign of some buying weakness. So I hope that makes sense. Again, and we dive into this stuff in our live sessions and in our education part of it in terms of putting all these pieces together, the big picture bias, the risk on a given trade, different trade setups that we talk about, how these boxes help you make sense of the story of the market and so forth. So, if there's more information on the website if you want to click around and check that out. Finally, last thing, tomorrow, Wednesday, at 11 o'clock Eastern Time, NinjaTrader has invited anyone on this list. If you're seeing this, you're certainly invited to come to a webinar. They're just going to tell you more about NinjaTrader. It's not meant as a sales presentation, although I think they'll offer a discount at the end if you're interested. But if you already use Ninja and want to learn more, there'll be an expert on hand there for you. If you're interested in potentially looking at Ninja, you can do that. I mean, there are other options. I've been a Ninja user for a long time now, and I'm a big fan, but that doesn't mean everyone has to be. But I would recommend going to it if you want. So I think it'll be valuable anyway. So hopefully that makes sense. If you have any questions on that, let me know. Info@DayTradeTheMarkets, or check out the website. Thank you so much.